Okay guys, very good morning. Welcome to the briefing for Tuesday, the 22nd of November. Just going to have a quick review of how things kind of finished up yesterday and some of the things we're looking out for today and some of the respective news flow which may dominate some of the price action. And starting off, you can see in the middle of my charts, the DAX is gapped up this morning, so European equities trading in positive territory. Predominantly following a positive session overnight in Asia, which followed the first time since 1999 that US stocks across four of the major indices, so the S&P, the Dow, the Nasdaq Comp and the Russell 2000, all finished at record highs simultaneously. So all four indices, it's not happened since the end of 1999. So looking at the futures price, and the S&P this morning, we've obviously managed to get above that key 2200 psychological level, and that is holding as just support now. Now we've got above that. Really, that was overnight in fairly early Asian trade when we snapped above there, a bit more aggressive on the move, and then that R1 kind of matches up with that level today, and the price has gravitated towards that for the time being. Obviously the previous high was 91.5. We managed to get through that shortly after the close of European trade. You can see during the first few hours of Wall Street trade, that was kind of holding resistance on multiple occasions before then. When Europe finished, we squeezed up, and then we've continued that move all the way through Asian trade as well. Looking slightly longer dated, obviously this is the kind of path that we've traded for the predominant part of 2016. The Brexit fall and recovery as central banks went into kind of defensive mode, if you like, or more further accommodation. The summer top that was contained at that 91.50, which we've snapped above, and you can see this is actually from yesterday, but now punching above that 22 level. So further gains then seen. That was the US election. Obviously that was the night where we were here when prices, obviously when it initially came under pressure, and we were limit down that 5% fall before the kind of Trump jump took place on the back of this premise of increased fiscal spending, and here we are up at these record all-time high levels. A couple of other things that were supporting that price yesterday, of course, were oil. We'll look at commodities here. This is when electronic trade reopened on Sunday night. And if you're looking at a percentage type move, it was a pretty impressive, actually. We were from Friday's kind of close all the way up to the high. You're looking at a near 6% move in crude oil within kind of a 24-hour period. So from around 46.50 type levels all the way up to close to, well, it was a test of $49. All of this coming on the back of further signs, as we were hearing yesterday. We had the technical meetings in Vienna looking to discuss the finer points of the deal in Algiers we had a few weeks ago. And the kind of idea that we were saying, although I don't think we got filled in terms of a fairly conservative entry on a long, the directional bias was definitely correct yesterday in terms of our view that this is quite normal, I would say, OPEC behavior going into the big meeting on the 30th at the end of the month, which is only 8 days or so away. It's not unusual to have these oil producing nations start making quite bullish type commentary about they're willing to cooperate, they're willing to cut production, because ultimately it becomes self-fulfilling. The market starts believing the hype, we start buying into it, irrespective of the fact that many foresee an actual deal as being unlikely in terms of it coming to fruition. So it's that kind of classic buy the rumor, sell the fact type OPEC pre-event price action, I would say. And going through the next week or so, I would be expecting more and more OPEC type comments to materialize. So just something to be looking out for, I think, as we go through until that meeting on the 30th. Taking a quick look actually at commodities in more broader terms, just switching my screen again. So copper has headed for its highest close since July 2015. Obviously oil, we just discussed, increases Iran signal optimism that OPEC will agree a supply cut deal. Iraq said it would offer new proposals to help bolster unity. We had Putin talking about optimistic on the deal and can foresee Russia freezing output. So this is kind of the driver of the equity gain has been very much based upon the material shares beating the broader gauges. So what you're looking at here, the white line, is the broader overall composite MSCI Asia PAC index. But you can see here, material stocks, the purple, and the energy, they've really been the outperformers also as well. Don't forget that this whole kind of Trump-inspired rally in US equities and what's globally lifted stocks is because of this fiscal stimulus that he's pledged and further construction, let's say, taking place in the US going forward. Obviously the demand for these energy and material type products is going to increase, and this is already starting to be evident in the way the market is pricing. One of the other things, of course, which you've probably read about that happened overnight has been an earthquake again in Japan. First of all, just giving you a bit of a geographic breakdown of where exactly it was and why it was important. Then we'll look at the way the market moved, because some of you probably who are newer to the market weren't around in March of 2011, when obviously they had that biggest one on record, which was 9.0. This one was quite a bit smaller than that, but still way above 6, which is deemed as what would be then a larger earthquake. So the star denoting where the earthquake struck, so very actually close to land mass. And this is Fukushima here, which I'm highlighting with my mouse, and that's the name I'm sure you're probably familiar with from that earthquake around 5 years ago or so. So this is the Fukushima prefecture of Japan here. What probably will make more sense to you looking at this is down here is Tokyo. So where the impact of the earthquake from a distance to Tokyo is about 150 miles or so. So you could actually feel the aftershocks all the way down to Tokyo, given the size of the earthquake. This is probably, from a trading point of view, what you need to be aware of. This is then looking at a map of where the earthquake struck, which was here. This is Tokyo, as I said, the distance, but these yellow dots signify the main nuclear power plants within Japan. So this is what was important before, is because the size of the tsunami on the 9.0 quake that happened in 2011 caused such big waves into the land when it hit the coast, that's exactly on the coast is where the nuclear reactors are situated, and that took a lot of them offline and caused damage to those facilities, and that was the main reason why that was such a big event. And as you can see here, there are a couple situated just offshore. Fortunately though, I did actually see this, I shouldn't be really looking at Twitter when I'm in bed with my wife at those sorts of hours, but I was nonetheless. But I saw this news when it came out, and the first reports that I saw were that the waves were said to be 3 meters high, so 10 foot. But actually when they hit, they were much, much smaller than that, and so none of the nuclear facilities were impacted. But knowing the way the land lies and where the nuclear facilities are is very much key, because that will define the impact then you're looking for on the Nikkei stock index and also the Japanese yen. What often happens though, and I saw this very much last night with the news when it was coming out, is the first kind of news that you see is shock and awe, and the news agencies tend to kind of big up the event, but actually in its overall outcome was much smaller than some of the initial reports that were coming in. But obviously to action a trade in real time, the first trade was probably the most opportune. If I flip over to the charts, you'll see what I'm talking about. So you kind of get the initial reaction is kind of panic, I guess, really. Because of the location, the first thing you think is this is awfully close to those main reactors. This is a rerun of what we had a few years ago. Because it was reported, I think, 7.4 to initially, then it dropped to about 5 in some reports. So this was the initial move in the Nikkei, and it was obviously a negative one, as that sentiment got knocked. And then you can see we recovered and some throughout the whole session as the event was deemed to be not as severe as had been initially expected, and also the overall broader trend of the positive close on Wall Street is the more powerful force. In terms of the Japanese yen, let me just get the time frame here. So this was the actual, these are half an hour candlesticks. And you can see here, this defines that the Japanese yen strengthened aggressively when this news originally broke. Now, again, for those newer to the market, this might not make a whole lot of sense. You'd think that the local currency should probably weaken, but this is to do with repatriation flows. So essentially, if there's severe damage, then let's say in more simple terms, insurers would need to pay out for reconstruction of development of facilities and towns that have been affected and so on and so forth. So external supply of money basically gets brought back in, repatriated back into yen to pay out for those future claims, and therefore the yen strengthens. So that was the initial fast money move, but then as you see, we then recovered, as did the Nikkei when the event was deemed to be not as quite as impactful as thought. Just as a guideline, I think we talked about this before in the news-based lectures, but keep in mind that as a statistic, Japan accounts for roughly 20% of the world's earthquakes of a magnitude 6 or more. So every large 6+ size magnitude earthquake that happens in the entire planet, 20% of those are happening in Japan. On average, there's around 1,500 earthquakes in Japan every year. So I know it sounds, from a Western point of view, quite dramatic, but in Japanese life, this is quite a normal situation, and the way that their towns and facilities and these nuclear facilities are constructed is to negate these kind of events. But certainly 7.3 on the first reports is pretty large, and if you hear that during our sessions, then obviously the key points are how close is it to Tokyo. If it's in Tokyo, obviously that would have an important factor. And then also the location towards these nuclear facilities is also important. Okay, just moving on to a few other things. Obviously can't go too long without mentioning this chap, Donald Trump. US to quit the Trans-Pacific Partnership trade deal on his first day in office. This is what he's been intonating. This is him talking, basically pushing through what his pledge was when he was initially in the campaign trail, I should say. In his words, not mine, in 2016 in June, he described the TPP as another disaster done and pushed by special interests who want to rape our country. Just a continuing rape of our country. He certainly has a way with words, does our Donald, or not our Donald, their Donald, I should say. Now, a question this morning, is this much like Brexit in terms of removing, from a trade perspective, out of the EU? Well, I guess in some respects it is, but I would say in terms of the power play here is that when it comes to us in Europe, obviously we're just part of it, a fairly considerable size and a contribution on both sides between us needing them and them needing us. But for the US, I would say it's a little bit more in control on their side, in which people want to trade desperately with the US, given it is the largest economy in the world. And so I think this is more of at this point, a bit of a call on bluff. He's obviously got to follow through on some of his campaign pledges. But it has prompted an immediate response from China, and this is the most important relationship really that he'll need to manage. China basically said and told Trump that ties with the US are too big to fail, that there's obligations to make sure the ties between the two largest economies improve and never worsen. That was written in the Communist Party's daily newspaper, the People's Daily. This is going to be really key. How hardball is Trump when it comes to dealing with China specifically? So that might be something key to just look out for going forward. A quick look then at the calendar for today. It's pretty quiet overall. And that does lead me on to a couple of things, because yesterday obviously you had the month threes went live for the first time, which is obviously an important step in their development. But what it did bring up was there wasn't a hell of a lot going on from a news perspective yesterday. There obviously was a couple of moves of note. Let me just flash back to the pound, which was one. We had a bit of a bid in the morning. Now, this was pre any real news hitting the tape. One thing that there was a weaker dollar, which was based more, I'd say, on the back of a bit of profit taking on the stellar gains that have been seen in the last 2 weeks or so. But the technical kind of breakdown that we had on Friday, it was more of a technical reverse that we had in the morning. There were a couple of comments, press conference from Theresa May in the CBI conference, where she looked to kind of soothe and reassure the business community about any sudden changes of rules once the UK leaves the EU. Maybe that was a little bit of a sentiment play. More so, I think it was a weaker dollar more than anything. And then you had that immediate spike from 124 to 125 that was over in a few seconds, and I know that caught a few people by surprise. And you know, it's one of those moves where there was no news. This was an order-driven move, said to be a UK name with a large order in sterling yen, probably ignited or awoke a lot of algos sitting there in waiting, based or ignited by momentum, and then that saw that big push higher. We got close to that high printed last week, and that kind of acted as a bit of resistance just above 125. But the point being here is that I think for the guys who went live yesterday, maybe a little bit, a degree of over trading. You know, Piers was quite clear in the briefing on Monday morning that the calendar's very quiet. Really, Wednesday's the real main calendar day, I'd say. Today, as I say, there's not a hell of a lot going on. And I think a lot of you are just getting a bit caught up in chasing the momentum. And most importantly is, that's fine. Even a quiet news day is tradable. But what you need to have, and what is critical, is your discipline with entries. I think what's happening too much is that the guys were just jumping in at incorrect points in order to execute the strategy that maybe they had, what was correct, but they were looking too aggressively to get in at not the best point. And you know, it's either it's patience, waiting for that best entry point, and it's also discipline in that if you've missed it and it continues to go the way that you thought, that's too bad. You've just missed it. And you just need to move on. So I know Vas has kindly printed out the trader checklist that I know that the guys here all have. You know, this is being put there for a reason for you guys. So I want to be seeing a bit more discipline from you for sure. So let's see how you go. As I say, from the calendar point of view, another quick summary. There's not a lot going on. US data this afternoon, you've got existing home sales, Richmond Fed manufacturing, obviously the API crude oil inventory is not until after market close. I'd say the US data points are really of no consequence because, as you know from last week, following Yellen's comments and so on from the Trump situation and pending inflation, a rate hike in December 14th from the Fed looks highly probable. So US data I don't think is going to have too much of an impact, especially from a housing perspective. Not too much either on the speaker schedule. Okay guys, gonna leave it at that. So enjoy your trading day, and I'll be in the chat room throughout, so any questions please do let me know. Have a good day.